the circular flow of national income. The next lesson what we have to study after learning certain concepts under macroeconomics lesson. So we studied total demand, total supply, in other words, aggregate demand, aggregate supply, as well as country's total output known as gross domestic product. These are broader concepts. It represents entire economy. So the next one, what we learn now, circular flow of income. Country's production is, we have to calculate actual country's production. In other words, country's GDP. When we want to calculate country's GDP, we should realize a particular tool or particular system to measure country's total output, as well as country's output is exactly equal to people's income. When people have such an income, it will be spent on purchasing of goods and services. Therefore, expenditure is also the same. For example, there was a producer making yogurt. Then, producer had to use number of resources, raw materials, as well as the businessman should use labor resources and particular wage must be paid. Then the businessman should have a particular premises for the production of goods known as rent. Rent should be paid. These are sort of cost involved in the production of yogurt, as an example. So up to now, producer spent 1,300. This is known as cost of production. But the output is not sold at 1,300 because producer, in other words, entrepreneur, should add profit. So the profit, of course, 100. Then the total value is 1,400. Total value is 1,400. Total output is valued at 1,400. So this is only a production in the economy. As same, other goods are made by using factors of production. Particular cost structure can be seen, and number of items are produced. At last, there is a value of the final output. So the value of the final output of everything which are produced in the country is said to be GDP. I took 1,400 as GDP here. I thought only one product in the country. At the same time, total income, raw materials owners received 1,000, workers received 200, landlord received 100. Entrepreneur received 100. When we add these income sources, it is income, is exactly equal to 1400. 1400. Production worth 1400. Income or the contribution to make such a product is also 1400. If people have 1400, they can spend only 1400 to buy goods. Therefore, if they purchase these stuffs, expenditure should also be 1400. So what do we understand? Production equal income equal expenditure. Production is 1400. Income is 1400. Expenditure is 1400. Now, such a situation should be discussed by using a technical analysis. It is called circular flow of income. So the same theory, what I said, can be recognized with the circular flow of income. So the circular flow of income is a financial and real flows between households and firms in which production is exactly equal to the value of total output is exactly equal to income, as well as income equal to expenditure. That's how circular flow of income is calculated, considered. The national accounts shows the value of national income stream among macroeconomic factors in an economic system. The graphical illustration of the process is called circular flow of national income. There are three different circular flow model depending on how the economy functions. Simple economy, closed economy, open economy. These are not economic systems, just models to realize certain concepts in macroeconomics. The cyclical flow, if not circular flow, in these economies should show the total output, income, and expenditure of the economy. In this case, external flow shows cost flows that households use to buy the entire output of a country. The internal flow shows how the money that manufacturers make from the sales of goods and services is distributed to the households who are the owners of the production factors. Accordingly, internal flow is real flow and external flow is financial flow. There are two types of flows. It is illustrated somewhere here. This is the circular flow model. So circular flow model include a simple economy. This is a simple economy of closed economy. The economy consists of four sectors: household, firms, government, and foreign sector. Whenever business and how firms exist, business and household exist, it is called a simple economy. This is a simple economy. So it's like this: household, firms, government, and foreign sector. So when these two is there, closed economy. In other words, two sector economy. Then the next, these three is there. It is called three sector economy. They are enough to everyone. If all exist, it is called open economy. So in a simple economy, household and firms, businesses. So households are having all the factors of production. Then all the factors of production are supplied to businesses, land, labor, capital, entrepreneurship. So all the factors are supplied. So then this is actually real flow, because not money, non-financial things, real flow. As well as they produce goods, businesses, then such goods are supplied to households. Even this is a real flow. Goods. Meanwhile, businesses paid rent, wages, interest, profit as factor income. So it is money, therefore money flow. Money flow. As well as goods and services purchased by households, paid money. Even this is money flow. So the circular flow model represent the way of circulating real flows and money flows in the economy, in which the total output is calculated by using production, income and expenditure approaches. So then total production, imagine they produce 1,000 worth goods, then obviously money flow is 1,000. At the same time, they paid 1,000 to buy goods from business sector. Production equal, income equal, expenditure. Production, income, and expenditure. So the production is a real flow. Expenditure on what do you call factor of production, money flow. Even this is a money flow, payment on goods and services. Then only goods and services are real flows according to that approach: production equal, income equal, expenditure. So then these are the explanation in four sectors: business, household, business, government, and foreign sector. First two, closed economy. First three, we can say simple economy. Here, all three sector economy or closed economy. Then all four, open economy. Therein after, household sector description. Household means people who are working together in order to achieve a common goal at a particular location. They are having a fixed budget. Then they work, then they earn money, as well as they spend money on goods and services. That's how household sector behaves. Households are considered as owner factor of production. Factor earnings generated by supplying its own production factors to businesses. Business sector is used to purchase goods and services produced from it. Household enjoy public services and transfer payments provided by government and also pay taxes to government. Household sector can identify as saving sector of the economy. Actually, they are the factor owners. Sometimes household would be a entrepreneur even. Some families are running a business. So sort of one side household, other side business. They have both functions. Likewise, then they receive some transfer payment from the government. Transfer means just money as a support from the government. Definitely, these households save money. Once they earn money, they use it for the consumption. The rest would be saved for the future purpose. So the business sector as a next one. Business sector, we can say firms, they are the one using factor of production and convert those factors of production into goods and services. Then they make such a production, earn profit, then shareholders receive dividend if it is a company, as well as they are supposed to pay taxes to the government. Even they receive particular benefits like subsidies from the government. Private and government institutions that produce goods are often goods and offer services utilizing factor of production offered by households with intention of selling are identified as business sector. Part of profits earned will be paid as dividends, and another is taxes to the government, and the remainder will be retained by institution for investments. Typically, businesses use profit for the owners. Even they can share among shareholders. The rest, the balance, would be retained for the future purpose. I mean, for the investments in the future. Government sector. This is common in every economy. Government actually a particular institution. They collect money from us in form of taxes. Even businesses are supposed to pay taxes. Then actually government depends upon taxes. Then a particular amount is spent on construction in the economy, infrastructure development, education, healthcare, and many more services. All these services are rendered by the government for the wealth of consumers. It's a responsibility, somewhat. With a public institution that provide public welfare services such as peace and law enforcement, national security, education, health, highways are called public sector. It provides consumer subsidies for household sector and producer product subsidies for business firms. Subsidy part, of course, compulsory. They have to encourage businesses as well as they have to protect consumers. Therefore, subsidies are given. Foreign sector, at last. Foreign sector means rest of the world when we trade with other countries. Of course, Sri Lanka trade with rest of the world. Simply, we export goods, earn money. If we import goods, pay money. All the flows are considered in this case. Sometimes not only export imports, there are some we can say different kind of transactions. Let's say receiving particular income sources from abroad, simply remittance, even employee compensation, even rent, interest, like different forms of income. Meanwhile, we are supposed to pay some expenses when we use their resources. Whatever, all the transactions are considered when we trade with rest of the world. So it says here, foreign sector deals with foreign countries, imports and exports, capital inflows, and settlement takes place through this sector. After discussing four sectors, we will consider two types of markets, actually factor market and goods and service market, two main markets. Factor market, of course, factors of production, land, labor, capital, enterprise. Actually, all the factors of production are traded. Resources are supplied to the market. These resources are purchased by the firms. The purpose is producing goods. Meanwhile, household receive factor income from factor market. Actually, even though I said a factor market specifically, not a particular location, not a particular place, it is just the word when we want to connect both household and firms when they exchange fact of production for money. Sometimes fact of production, we can say technically workers. Workers, of course, work in a particular business for money. So they receive money, like a say wage. So anyways, such workers are in the factor market, not a particular place. It's just a term what we want to combine when they trade, when they exchange factor production between firms and household sector. Factor market means a market which purchases factor production in order to produce goods and services. Production factors are provided by households and their earnings are called factor income. Then next, goods and service market. This is somewhat a location, sometimes virtual. Location means there are supermarkets or else variety of places are there to buy goods, services. Online teaching, virtual market, no place exactly. Then place is not must. Anyways, goods and services are exchanged once again between buyers and sellers, firms and households. Government and private sector organization which produce goods and services by utilizing factor production obtained from household and market in which such goods and services are sold is identified as goods and service market. Thereafter, a particular word is added, withdrawals, if not leakages, as well as injections, if not additions. For example, we earn money as household. If we earn money, we do not use entire income for the purchasing of goods. We will definitely save a particular portion at a bank. The purpose is future use. If we save in a financial market, it is called bank. If we save at a financial market, actually now we can't use such money what we saved in order to buy goods and services. That's why it is called withdrawal. We do not use money there enough to buy goods. Meanwhile, people are supposed to pay direct taxes for the government. Direct taxes, we should definitely pay for the government before spending money on goods. Therefore, a particular amount is paid to the government as a tax. Then such an amount cannot be used to buy goods and services. You see, it is a withdrawal. Meanwhile, imports, we would have purchased goods from abroad. Once again, our money is sent out from the economy. Our money went out, goods purchased, countries' money decreased. country's money decreased when we buy goods from abroad because our money went out. Therefore, import, even a withdrawal or leakage from the circular flow of income. Circular flow of income represent a model for the entire economy where business and household sector exist in order to exchange money flows, real flows. So then the entire income earned by household does not flow into business sector. Part of that income is spent for different purposes, and part of income that does not flow into business sector is called leakages. Such leakages have contractionary effect on national income. Savings, government taxes, imports are sort of withdrawals. Actually, only withdrawals, not sort of. These are the only withdrawals. Then after injections. Injections, of course, new money came into the economy, or new money came into a circular flow of income. Let's say we saved money at a bank. Then the businesses use our money where we saved and invest once again into the economy. They would have set up a business or branch. Money came into the economy once again. Therefore, it is an injection. Money came into the economy where we saved. As well as government collected taxes and they spend once again. So government spending, even injection. Lastly, we export goods, then we receive money from abroad. Goods went out, but money came in. Money came in sense circular flow of income received a new finance. Therefore, it is an injection. Any income that flow into a circular flow in addition to the income that flows from household sector to business sector is identified as injections. Such injections have an expansionary effect of the national income. Simply, economy can grow. When there is a withdrawals, economy can shrink. Simply contractionary effect. Right, simple economy, we can say closed economy, two-sector model. All of these are termed for this section. In here, we do consider only economy consists of households and businesses. Then they exchange factors of production, goods and services like real flows. Meanwhile, fact income and payment for goods and services are exchanged as money flows. So two-sector function is simple economy. They are household sector, business sector. Simple economy without saving and investment. So this is sort of an assumption. We do consider simple economy, then our assumption, of course, there is no any saving or investment. Once we earn income, it is completely spent on purchasing of goods. Then it circulate. It circulate. Therefore, total production equal to income as well as injections, say expenses. In two-sector simple economy, that entire economy generated by household sector by supplying all factors of production owned by them. The business sector is spent on consumption, government spend, say investment, savings, production of capital goods do not take place in such economy. Thereafter, households provide factors of production to business sector. Through this, real flow is created. Household supply, these factor is return, rent, wages, interest, profit. The payment made by business sector to household sector for utilizing these production factors creates a financial flow. Also, selling of goods and services produced by business sector to the household sector, households create a real flow. Households use the factor income earned to purchase goods and services produced by business sector, and this again create a financial flow. Economy achieves equilibrium position when its total income equals total expenditure. It's a particular equilibrium position when all the income is equivalent to its expenditure. After that, we do consider national income accounting. Businesses have to make accounts. Businesses should prepare accounts. What are the accounts? Profit, we can say, statement of comprehensive income, as well as financial position, statement of financial position, like main statements of a business. Then the income statement implies profit or loss of the business as a ultimate target, you see. As well as country should prepare set of accounts to capture the total output that the economy produced, as well as the economic growth, to measure the economic growth. So the purpose of preparing national income accounts to consider countries' growth rate. For instance, central bank declared the economic growth in Sri Lanka in 2020 minus 3.6. What does minus 3.6 negative economic growth? Actually, such a figure was captured by the central bank of Sri Lanka when they have national accounts. If they have national accounts, they can clearly identify progress of the economy. So the national accounts of accounting is really important, not only for the economic growth. There are some other targets. We can identify situation of the economy. We can realize sectoral changes, and we can forecast the economy as well. So the national accounts are that much important. Every country in the world should prepare national accounts, as well as national accounts are made by using a new system of national accounts known as SNA, System of National Accounts, 2008. Then it has given a particular framework how to prepare national accounts in a territory. So national accounts, national production means total value of goods and services produced in an economy within a certain period of time. And this is calculated through the preparation